Hello, I'm Julie, and in this series of videos we will cover frequently asked questions about the Historic Homes Tax Credit Program in an effort to ensure the application process is smooth and efficient. This video will address the basics about the program. What is a tax credit? How is it used? And what are the eligibility requirements for the program? To begin, eligible applicants to the Historic Homes Tax Credit Program must be either a nonprofit housing corporation or a resident taxpayer of the state of Connecticut who possesses title to a historic home. If you have a purchase and sale agreement on a home, you may be eligible to apply, provided you submit a purchase and sale agreement with your application. So if you are wondering, what is a historic tax credit exactly, and how will it benefit me? Tax credits are a tax incentive that allows certain taxpayers to subtract the amount of the credit from the total they owe to the state. Tax credits are not a grant, and the benefits are not realized until the project is complete. Further, by statute, the Historic Homes Tax Credit can only be used by a C corporation meeting Connecticut State Tax Liability Sections 207 to 212. An individual property owner cannot use the credit. It must be sold to an eligible corporation. There are brokers that can assist in the sale of the tax credits, but there are also corporations that purchase the credit directly from the property owner. The program provides a 30% tax credit on eligible expenditures for the rehabilitation of historic owner-occupied residences of 1 to 4 residential units, up to $30,000 per unit. Eligible costs are defined as any cost incurred for the physical construction involved in rehabilitating your home. For example, on the exterior of your home, it might include improvements to the roof, chimneys, siding, and windows. At the interior, eligible expenditures may include repairs to the damaged plaster, refurbishing original millwork and floors, staircases, and stair halls. Eligible costs could also include new mechanical systems and electrical and plumbing upgrades. What are not eligible costs for the purposes of calculating the tax credit are items such as permits and fees, architectural and design costs, movable appliances, site work, and new construction. So how is the credit calculated? If you are a homeowner of a single dwelling unit and you incur costs of $150,000 in eligible expenditures, while 30% of $150,000 is $45,000, the tax credit would be valued at $30,000 since there is a per unit cap of $30,000. Conversely, if you own a two-family home and you incur the same amount in costs, the tax credit would be valued at $45,000, as the total cap for a two-unit home is $60,000. Now that you know what a tax credit is and how it is calculated, does your property qualify? The minimum requirements to be eligible for the program are: 1, that your property is listed on the State or National Register of Historic Places, either individually or as part of a historic district; 2, that the total project cost is at least $15,000; and 3, that the proposed work during the tax credit period comply with the Secretary of the Interior standards for rehabilitation. Inquiries about whether your property is listed on the state or national registers should be emailed to the program administrator, whose contact information can be found on the SHPO's website at www.cultureandtourism.org. More information about the standards can be found at the National Park Service's website, www.nps.gov, or by Googling Standards for Rehabilitation. More discussion about the standards is also going to be in a subsequent video. Thank you.